U.S. dairy industry is currently wading through a number of challenges and opportunities. We recently caught up with one Pennsylvania dairy farmer who painted his outlook for the rest of the year.
As far as 2025 being worse than 2024, I'm trying to be optimistic and say it will be better. So far in 2025, it's been decent or okay, depending how you look at it. With the uncertainty with the new presidential administration can maybe throw a monkey wrench into that. With tariff-related things, that can cause some uproar. But I'm hoping that if we're going to experience some short-term pain, we'll experience long-term gain in the long run.
Well, this week, Farm Journal released its State of the Dairy Industry report. The annual report surveyed 400 producers across the U.S., milking anywhere from 100 cows up to 20,000 cows. The questions were about the current economic state of their operation and their outlook for the future. Farm Journal's Rook joins us now to uncover some of the highlights. Michelle?
Tying, the report uncovered a great deal of optimism among U.S. dairy producers. Now, that may seem a bit surprising with the uncertainty regarding trade, tariffs, and immigration policy. However, the positive outlook is based on improved profitability through revenue diversification, the use of technology, plus an expansion of the processing industry and strong exports. U.S. dairy producers are optimistic about the future, with nearly three-quarters, regardless of size, anticipating increased profitability in 2025 versus a year ago.
And there's a lot of things that contribute to that, but certainly producers are not just relying on that milk check. They're able to utilize alternative profit sources, especially that beef on dairy that's setting some record prices that dairy producers are able to capture.
In fact, nearly three-quarters of operators are engaged in at least one beef on dairy practice, with breeding and raising the most prevalent methods.
Whether they're breeding to it and selling them as day-old calves, or if they're keeping them to 400 pounds or raising them out. But more dairy producers are utilizing beef on dairy, and really with those $1,000 wet calves, it's understandable why.
Technology is also improving margins. Two-thirds of producers use at least one form of feeding technology, and 58% use health monitoring tools, including Bonerts on their 750-cow Jersey operation in Northwest Illinois.
We utilize health monitoring ear tags in our mature cows, and the data that it can capture is telling us when they're sick before we can even see signs of that they're sick, so we can keep our herd healthier.
The expansion of dairy processing capacity in the U.S. after several years of stagnation is also giving producers the signal to grow.
With that $8 billion plus processing coming on board, producers are seeing investments by their cooperatives, by their processing plants, and so it gives them a signal that they can grow, and that's something that we haven't seen in the last few years.
Still, dairy operations are facing various challenges, including the shortage of ag labor and uncertainty on immigration policy.
We rely on immigrant labor tremendously across the country in the dairy industry. In fact, of the 9.36 million cows that are being milked, 2/3 of that is being milked by immigrant labor.
When expanding, they face headwinds such as the high cost of land, inputs, and tools to meet sustainability goals, plus tight heifer replacement numbers with that higher beef on dairy production.
So dairies that want to grow, and if they want to grow quick, they're going to have to pay for that and pay a pretty penny.
Despite that and the backdrop of trade uncertainty, a full 44% of survey participants plan to expand in the next 5 years, providing a solid future for the U.S. dairy industry. Exports are also a bright spot for U.S. dairy and account for 15 to 20% of annual sales. Growth is being led by cheese exports.
Over the last 12 months, 12 out of the top 13 global cheese markets have all increased their demand. And that is unusual. We're growing at like twice the speed we were growing pre-COVID.
And U.S. cheese exports have remained solid even with President Trump's announced tariffs and with USMCA partners not being subject to higher tariff levels.
New Mexico is the most important part of the puzzle for U.S. cheese and U.S. milk powders. And so long as that's not center stage, we're okay.
The escalation of Chinese tariffs shut off U.S. sales, but they buy lower valued products like whey, lactose, and permeate for pig feed. Still, that market started normalizing even before tariffs were eased.
It took about a week or so, and you start to hear about some of the different workarounds where other product was going to China, and we were replacing the other product somewhere else in the world.
But even with the risk of a trade war, Plord is optimistic about the future for U.S. dairy exports.
I still think that the U.S. has the best platform, best available, immediately available, ready platform for growth to serve the world.
Increased exports are positive for prices, and that's why milk and cheese markets rallied after the 90-day tariff delay. June Class 3 milk futures touched $20 per hundredweight May 16th before retreating, but eclipsing that level could be tough due to flat domestic sales.
But the real problem is just demand. You've got enough inventory and you've got maybe enough concern on the economy that there's just nothing that really points the milk markets on this surge to get to $21, $22, $23. It just doesn't seem to have the right mix of events for that to happen.
Still, with current on-farm milk and feed prices, most producers are above break-even levels.
Milk futures have been okay. They've bounced back off their early April, late March lows. And at the same time, we've seen corn, if you look at new crop corn, go from 470-ish to 440-ish. And you have soybean meal that's been struggling to get over $300 a ton. And so you have seen some better numbers on the income side prospectively.
And that continues to fuel optimism about dairy profitability for the balance of 2025. I'm Michelle Rook for U.S. Farm Report.
Thanks, Michelle. Well, there is more talk about future trade deals. That's a glimpse of Ag Around the World next.